The market is currently closed for the weekend, as it is Sunday, November 2nd, 2025. We are looking at Circle Internet Group, Inc., trading under the ticker NYSE CRCL. The stock finished Friday's session, October 31st, 2025, at 126.98 USD. This was a solid move up, gaining 4.27 or 3.48% for the day. In after-hours trading, it tacked on a little more, rising 20 cents to settle at 127.00. Now, many investors saw that 3.5% pop on Friday and immediately lumped it in with general crypto market excitement. The common belief is that CRCL is just a proxy for digital assets, or perhaps a slightly less volatile way to play the fintech space. The expectation is that as crypto adoption grows, Circle grows. But this is a fundamental misreading of what is happening. The reality, and what the smart participants are watching, is that Circle is rapidly transitioning from a simple digital bank that profits from interest rates into a core, regulated financial infrastructure provider. That move on Friday wasn't just noise. It was a reaction to news that the company has brought heavyweights like Visa and BlackRock onto its new Arc blockchain testnet, a project that has very little to do with the price of Bitcoin and everything to do with the future of tokenized assets. Let's look at Friday's trading session to understand the tension. The stock opened at 126.31, ran all the way to a high of 129.40, but then fell back, touching a low of 124.88 before closing near 127. This tells you there was initial euphoria, likely on that ARC news, followed by significant profit-taking. And why wouldn't there be? This is a stock that has been on an absolutely parabolic run since its IPO back in June 2025. Depending on the exact IPO price, many early investors are sitting on gains of 350% to even 700% in less than 6 months. When you have that kind of move, every piece of good news is met with a wall of sellers looking to lock in those life-changing returns. The volume on Friday was robust, confirming there is significant institutional interest in swapping these shares. The expectation is that the stock must cool off, but the reality is that its 52-week low is $64 and it hasn't looked back. To truly understand CRCL, you have to ignore the daily crypto charts and instead read their quarterly reports. The company's Q2 2025 earnings, released back in August, were a perfect example of this split personality. On a GAAP basis, the company reported a staggering net loss of $482 million. Many retail investors saw that headline and were confused, but the institutional players read the footnotes. That loss was almost entirely driven by a $424 million non-cash charge for stock-based compensation related to the IPO. It was an accounting formality. When you looked at the actual business, adjusted EBITDA was a positive $126 million. This is the disconnect. The expectation is that a company losing nearly $500 million is in trouble. The reality is that the underlying business is generating significant cash, but its growth and post-IPO structure are obscuring that fact on the surface. The core of Circle's business model is, of course, the USDC stablecoin. This is where the macroeconomic story comes in. The company currently has over $61 billion in USDC in circulation. For every dollar put in, Circle issues one USDC token, and critically takes that dollar and invests it, primarily in short-term U.S. Treasury bills. In the current high interest rate environment, this is an incredibly lucrative position. They are earning a high percentage yield on a $61 billion float. This is the engine driving that positive EBITDA. But this is also the single greatest risk, and this is what the short sellers are focused on. Any stock that is run up this far, this fast, is going to attract immense short seller attention. The bear thesis on CRCL is not complicated, and it is compelling. First, there's the valuation. With a market capitalization now north of $30 billion, bears will point out that this is comparable to established giants like State Street which has trillions of assets under management, not billions. The expectation is that Circle is a high-growth tech company. The reality, shorts argue, is that it's a bank, and it's an absurdly overvalued one. The second part of the short thesis is that the company's primary profit engine, that interest on its reserves, is entirely dependent on the Federal Reserve. When, not if, the Fed begins cutting interest rates, Circle's profit margins will be compressed almost overnight. Their main revenue source will shrink, and that $127 stock price will look indefensible. Third, competition is brutal. Tether, or TUSD, remains the largest stablecoin by a wide margin, and it is a private, unregulated behemoth that is also printing profits. More alarmingly for Circle bulls, Tether has announced it is launching its own U.S.-compliant stablecoin, USAT, which is a direct assault on Circle's home turf and its entire marketing narrative of being the regulated option. This is where you, as an investor, must become aware of short activity. How do you track this? You need to look beyond the stock price. Check the borrow rates for CRCL shares on your trading platform. This is the fee that short sellers must pay to borrow the stock to sell it. If you see that rate suddenly spike from 1% to 10% or 20%, it's a sign that demand to short the stock is overwhelming the supply of shares to borrow. This is a red flag that big firms are building a position. You should also be tracking the official FINRA short interest data, which is released twice a month. This will tell you the total number of shares held short. From that, you can calculate the days to cover ratio. A high ratio can sometimes indicate the potential for a short squeeze, but chasing those is an extremely high-risk strategy. A more professional approach is to monitor the options chain for large, out-of-the-money put purchases, which is how institutions will often express their negative view or hedge a large position. What's your take on the rising short interest? Is it smart money seeing the inevitable correction, or is it just bears fighting a powerful new trend? This is why that ARK testnet news is so important. Circle management is not stupid. They know their reliance on interest income is a weakness. Their entire long-term strategy is to diversify revenue away from it. They are building a services business. This includes Circle Mint, an institutional-grade platform for minting and redeeming USDC, the cross-chain transfer protocol, which allows USDC to move between different blockchains, and now this new Layer 1 ARK network. They want to be the pipes, the plumbing, and the core infrastructure for the entire tokenized asset economy. They don't just want to be the bank. They want to be the SWIFT network, the NYSE, and the U.S. Treasury all rolled into one for the digital age. This is the bull case. The expectation is that they are a one-trick pony tied to interest rates. The reality they are trying to build is a diversified financial technology platform that will thrive regardless of what the Fed does. The company's S-1 filing, which we all analyzed before the June IPO, laid this out. It showed a business with two distinct sides: the massive, low-margin but cash-rich stablecoin reserve business and the smaller, high-margin but nascent services business. The entire story of this stock for the next 5 years will be the battle between these two narratives. In quarters where interest rates are high, the reserves will carry the earnings. In quarters where interest rates are low, the services business will have to prove it can pick up the slack. Right now, investors are caught in the middle. The stock is far from its 52-week high of $299.99, which it likely hit during the post-IPO mania, but it has also clearly found a strong base at $64. The current price of $127 is a battleground. Retail sentiment on forums like Reddit is wildly split. You have one camp of true believers who bought the IPO and are holding for a $1,000 price target, and another camp of value-oriented investors who are screaming that the stock is a bubble. Looking ahead to next week's trading, the key will be to see if CRCL can hold the 125 level. That 124.88 low from Friday is now a critical short-term support level. If it breaks, we could easily see a retest of the 120 area. If, however, it can break back above that 129.40 intraday high, it has a clear path to try and fill the gap up toward 135. Watch for more news on that ARK pest net. If Visa or BlackRock release their own statements confirming their involvement, it could provide another leg up. Conversely, pay very close attention to any news from Tether regarding its USAT launch. Any sign that it is gaining traction or getting regulatory approval in the US is a direct and immediate threat to Circle's entire narrative. Comment below how many shares of CRCL you currently hold. Are you one of the investors who got in at the IPO, or did you buy in after this recent run-up? In the end, Circle Internet Group represents a fascinating tension. The market's expectation is for a simple, crypto-adjacent growth stock. The reality is a complex financial institution, part bank and part high-tech infrastructure that is caught between a parabolic stock chart, immense regulatory opportunity, fierce competition, and a complete dependency on macroeconomic policy it cannot control. This is not a stock for the faint of heart.